When your financial advisor showed you how to protect your money from ever losing a penny while grabbing up to double-digit gains in good years, what'd you think? Maybe safe and productive growth isn't all that important to you. Maybe you're a thrill seeker looking to chase 1,000% returns in the market. But if you're not Gordon Gecko from the movie Wall Street and would like to protect what you have while still getting great returns, then maybe you should stick around for a bit. My name's Kurt Jackson with KJ Financial, where our mission is protecting America's wealth. Safe and productive growth is at the core of our mission, and we've uncovered a unique strategy which provides safe and productive growth for our clients. It can provide you with 100% principal protection, growth when the indices go up, gains are locked in every year or 2 years, depending on which one you choose. You've got downside market protection. This is used for safe and productive growth, and maybe more importantly, it's for protected lifetime income. Okay. Let me jump into our online portal that gives us up to the minute, up to the second results. Does a search for us. It's really a unique tool we have. I've already done it here just to save us a little time. This is based on the most recent 10-year National Association of Insurance Commissioners. We're using $100,000 premium. We're using the state of Kansas. So in the last 10 years, this black number here, this has given safe and productive growth of 14.22% each year. Okay. The number in green here is the best 10 years in the last 20 years. And this is the worst 10 years in the last 10 years. So 13.28 in the worst 10-year period. These are fixed index annuities. I know annuities get a bad name, and for the most part, deservedly so. But you know how things improve through innovations? Well, fixed index annuities have really tried to overcome those negatives that people thought about annuities. So don't let the word annuity scare you off here, because you'll miss out on some tremendous opportunities. But this is a 2-year crediting schedule. So basically, you start today, nothing really happens with your money until 2 years from now, and then it's credited. They're using the SG Global Sentiment Index. I'm not going to go into the details on that today. If you'd like to know more about that, we can schedule a call, and I'll certainly go over that with you. I'm not a big fan of fees unless we get value out of it. This has got 1.5% annual fee there. And it does, in our estimation, when we've run the numbers on it, it makes sense. And if you want to have a call with us, we'll show you why it makes sense. Participation rate's what we call this. Crediting rate is what it is. This credits at 210%. Okay, I'm sorry, I'm trying to highlight that. So every 2 years so let's assume 2 years from now, the SG Global Sentiment is up 10%. You would get 21% credited to you. So that's pretty amazing on how they do that, and that's what helps make these things so strong. So I hit this illustrate button, and I open it up here. Like I said, I'm trying to save some time since we're keeping this short video. Here's our high period, our low period, our most recent period. Interestingly, our high period included 07, 08, and 09, where from October of 07 to March of 09, the S&P 500 was down 59%. Yet we gained in this scenario, they gained 11.85 in 07, 08, and then 44.67 in 2009, 2010. The low period includes that also, those 3 years there. So that's important to consider. But I guess I'm just showing you that we even got a high period including those. And then here's the most recent period. Let me scroll down here and just show you kind of a quick view. This red line here is the S&P 500 the last 10 years. This blue line is the SG Global Sentiment back tested. Okay? So this index has not been around for 20 years. It hasn't been around that long. It's built on an algorithm, so the algorithm dictates what this does. So the powers that be let us show back testing on it because they're rules based. They move whenever those trigger points are hit. Now keep in mind, historical performance does not predict future performance, but it's really the best way for us to try to evaluate the potential of things going forward. Right. So if you would like to know more about this, we could schedule a quick 15 to 30 minute call. Real easy to do, easy peasy. Would be in front of your computer, and I'll go over everything with you, answer your questions. You can do that. You can call my cell here, 816-582-5532, or email me, and we'll get that set up. I encourage you to take a long look at this because protecting our wealth is so important, but we also have to be able to grow it, and we've found the secret to doing that. So thanks for tuning in. I hope to hear from you soon.